This video is about the reasons behind support and resistance. Hello, I'm Peter Martin with Trading 212, and I thought it might be instructive to look at the psychology that lies behind the market behaviours that contribute to support and resistance. Now, hopefully you know what I mean when I say support and resistance, but if you don't worry. If you look on our YouTube channel, there's more than one video there that explains the concept of support and resistance. And just to boil it all down to the nuts and bolts, support is a tendency of the market to bounce from previous lows, and resistance is a tendency of the market to pull back from previous highs. Now, why does this happen? Well, essentially it's because market participants latch on to previous highs and lows and use them as reference points by which to gauge whether the market is high or low in price. As always, it's much easier to explain this, but I'll explain what I mean by looking at a chart. So let's now take a look at a chart of dollar yen in order to do that. I'm looking at a daily chart of dollar yen, and we're zoomed in a little bit. As you can see, it's a chart from early 2017 into October, late October of 2017. We could have used a more recent chart just to look at some of these other tabs I have open. If we look at Euro Sterling here, this is for 2018 into early 2019. We can see there's quite a few examples of support and resistance on that chart. Similarly, Euro dollar, this is the last few months of 2018 into early 2019. We can see that the price is rebounding from resistance at a fairly consistent level there in those last few months. However, the reason I'm using this dollar yen chart, just because it's a nice suitable example for the purposes of illustration, because we have these nice regular oscillations in price fluctuating, as we can see, between a range. Now, it isn't exact, but there is a kind of consistency, a thread between where the market was forming highs and where it was forming or finding lows. In other words, we're seeing support and resistance. But why is this? Well, let's run through what might be going on in the minds of traders that contribute to this behavior. Let's suppose that there's a trader who wants to sell dollar yen back here in March. Now, they see the market going up, approaching, breaking above 114, and then starting to approach 115, and then the price breaks above 115. And at that point, he or she might be hoping that it's going to go even higher because it's been rising, and they're thinking, oh, I can get a better price if it goes even higher. Or they might be a little scared to sell in case it does go higher. Either way, they're hesitant and they hold off from trading. But the market does sell off, and as dollar yen slumps, coming down here, down below to 110 and then down below 110, they're pretty upset with themselves that they didn't sell when the market was up near 115. And so the trader starts to latch on to that recent high, using it as a point of comparison by which to judge what is a high price. So when the price rebounds here in mid-April and climbs back towards that previous high, the trader is more inclined to sell than he or she was the last time it was up there. Now the price breaks back above 114. And this now seems like a good opportunity to go short because of what happened in the recent past. This price now seems reasonably high because it is close to the previous recent high. And of course, it will not just be one trader thinking along these lines. As the market comes in proximity to that previous high, it attracts other sellers to the market, causing the price to fall close to that recent high. This is our resistance. And the next time it rises to that same level, we see the same thing again. And contributing to this will be technical traders having seen the price rebound a couple of times near that price, and they're now expecting or believing that sellers will come to the market at that level. And in order to try and profit from that, they act on that expectation and become sellers themselves at that level. And thereby there is an element of resistance being a self-fulfilling prophecy in this aspect. But also consider someone who is a potential buyer of dollar yen. For the market to break above this resistance level, we need traders who are willing to buy at or above that level. But our potential buyer is looking at these previous dips that happened at or near to that resistance level, and they start to expect a dip at that price. So what are they likely to do? Well, they might be inclined to wait for the dip and see if they can get a better price to buy. Now let's go back to consider our original trader who sold here in May when the market drew near to that previous high. As the market subsequently falls, they're looking to buy back and take some profit. They've got their eye now on the recent low, this one back in April when it was round about 108, 108.50. Now they're thinking that kind of level is a low price because once again they're latching onto that recent low and using it as their reference point. And a fairly typical fear for traders is the fear of losing a profit. A trader may have a desire to lock in their running profit that they have to realize it because of that fear. And that fear may grow as the running profit increases. So when the market draws near to that previous low, they buy back. And that kind of behavior in aggregate with other traders pushes the market higher, somewhere in the vicinity of that previous low. Now, the more times the market revisits these highs and lows, we build up a kind of psychological barrier with traders willing to buy at what appears to be low prices and sell at what appears to be high prices. Now, of course, I have to stress that the concept of support and resistance is not a law or a precise science. The market doesn't have to rebound at these levels, but it is a tendency that we can observe when we look at charts. Now, some traders will use support and resistance as the bread and butter of their trading approach, selling into highs and buying into these lows. But trend followers take a different approach. They're trying to profit from those times when support and resistance levels fail. And instead of coming back from these levels, the market instead breaks out and forms a new trend. But that's a bit of another story. So that was a look at some of the reasons behind support and resistance using the web app. But don't forget, you can download for free native mobile apps for iOS and Android. And you'll find links to those in the video description below. If you enjoyed the video, please hit the thumbs up button and give us a like. Or why not share your thoughts in the comments section? We do read each one. And if you click on the red subscribe button and then select the alarm bell icon, you'll get a notification for every new video we add. We upload fresh content weekly. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. Goodbye.